Welcome, and thanks for joining me today on Mortgage Manager Playbook, a podcast for sales leaders who want to improve their team's sales performance and originate more loans. I'm Pat Sherlock, your host. Today is a deeper dive on the National Association of Realtors settlement proposal. My guest today is S.A. Ibrahim. He is CEO of Radian and CEO of Greenpoint. He is now retired, but SA is involved with fintech and is one of the smartest people I know in our financial services business. Hi, SA.
Hi, Pat, and thanks for flattering me. I don't know if I agree with all that, but it's a pleasure to talk to you.
Well, in my opinion, you are, and I love talking with you. And I think that this is settlement with the National Association of Realtors is really significant to our industry. And there's not a lot of conversation as far as its impact on the mortgage space. And I wanted to talk to you about it to see how you think this will actually play out. Of course, we all know that the settlement is a proposal. It's supposed to take effect in July. And of course, now the Department of Justice has entered into it. But regardless of that, this has been a complaint for over years and years about the commission structure and all of that. So, SA, let's talk about it from your viewpoint. How do you see the impact to the mortgage side, who has been really basically set up to similar to the real estate agent end of it, where the buying agent is typically who loan officers are dealing with. And now with all of this that's going on with the settlement, it seems like it's going to have a tremendous impact. So what are your thoughts on that?
To talk about any impact, we should really talk about the impact on the realtor industry and the consumer, and then the
Mhm.
related impact, potential impact on the mortgage lenders. But you're right, this has been so talked about over the years that I'm surprised that now that it seems to be really happening, there's not much chatter about it. My takeaway really is that this kind of a dramatic change has implications that produce winners and losers, not
Mhm.
within the industry as well as outside the industry. I've been in companies that have gone through seismic changes. And the first point I'll make on a positive note is that you can never underestimate the creativity of the people in industries, and the real estate industry across the board has had very, very creative people who have pioneered new products and new ways of doing business to appeal to broader segments, as well as been very responsive to economic and other changes in the industry. I myself, at both Greenpoint and Radian, went through a lot of changes, most notably the dramatic economic change at Radian, and people adapted to it. And while it was difficult going through those changes, there were winners and losers that emerged. So one possible scenario in terms of realtor commissions is that there could be a lot of differentiation based on buyer needs. Obviously, regardless of what these changes are, there's always been an infusion of new technology in the industry. With the AI coming in, we are going to see smarter ways in which homes get presented to borrowers in a narrower choice. So there's a lot of technology changes already happening. But one of the things that I've always found it tough for buyers and sellers of homes to stomach, including myself, who backed out of a recent rental property sale, is after, and I'd negotiated the commission down to 5%. After you pay the 5% as the seller, you get 95% of the proceeds, and it just wasn't worth it. For lower commission, I would have made the sale. So there's a transaction loss. So you could argue that there'll be more transactions on the margin at least. But on the margin, a lot of things are shaped. There could be an emergence of brokers who cater to the mass market and charge maybe a fixed commission for the transaction and start using technology and other means to become more efficient. So there's a real opportunity for real estate industry to rethink the way it does business, and new winners and losers to emerge. And we may see some people actually end up making as companies a lot more money than they did in the past because they grab a lot more market share. It's also going to discourage part-time realtors from getting into the business because the commission structure meant you could do the business, a few hours a week as a part-time player, need into the business of full-time real estate agents because it was easy to make enough money. So I think that's a very creative industry. The realtors are among the most creative people. They'll they will adapt to it after a little bit of pain, and we will see new models of doing business and new winners and losers. And the ones who win will be better off than they were before that. I can tell that from the experience and having gone through industries that won. So that what's the impact? Having said that, what's the impact potentially on the buyers and sellers of real estate? Obviously, their cost of transaction will go down, which over time should make potentially feed more transactions, although there's so many other economic and other factors that I don't know whether we can even discern the difference. But it certainly takes away one of the biggest frustrations or one of the biggest negatives that borrowers have had, or home buyers and sellers have had about the transaction costs. And this has been one of those friction things. And from a mortgage lender point of view, as well as a mortgage investor point of view, the biggest benefit, it's like tighter appraisals. All of a sudden, you're financing a home at a value that is closer to the actual value because the transaction cost, which was an artificial construct on top of the real value of the home, has all of a sudden shrunk by whatever amount. Most people think it's going to go down by half, so half, and and it's more predictable, and so it's always better when you're financing it. The next, I think, thing that we may see happening along those lines is the title business, but let's not go there.
Yes, let's not go there. This one's enough. And so I'm interested as when it comes down to, I've heard there has been some conversations where lenders, in particular mortgage companies, have talked about that maybe the loan officer going forward is going to be in other words, a dual licensed person, where it's going to be not just a loan officer, and likewise, they also be a real estate agent, and reverse, the real estate agent who's on the buyer side might become a loan officer. So therefore, lenders might be picking up those types of people, which they obviously haven't done in the past. What do you think about that?
I think it's a great thing if it would happen, because one of the frustrating things when you are a buyer or seller of homes is dealing with so many different people who have their hands
Mm-hmm.
in the transaction. Of course, there are regulatory and other barriers in this area, but I think those are artificial barriers. All regulation is designed to protect the consumers, but sometimes,
Mm-hmm.
it actually doesn't. It creates walls and it creates different pockets for the consumer to finance. So if that happens, you could argue that the real estate transaction becomes one where you go to one shop and get the
Mm-hmm.
transaction done. Now, even though there may be one person you're dealing with, behind the scenes there could be different people. As I thought of this change, I thought of the automobile industry. So you go to buy a car, and
Mm-hmm.
you're dealing with a salesperson who's extremely knowledgeable about cars, but in the same shop, you're dealing with a financial person who's the F&I person, who's very knowledgeable about financing, because they're two different specialties.
Mm-hmm.
So the individual sales agent that the borrower may be dealing with, or the buyer or seller of a home may be dealing with, may have a lot more deeper knowledge about the houses and the housing market,
Mm-hmm.
and a lot less, but still a lot more knowledge than the borrower or the consumer of the financing market. But when it actually comes to making that transaction happen, they may take them to an expert in their own shop to
Mm-hmm.
facilitate that transaction, like in the automobile business.
Well, that's certainly the comment that some of the mortgage executives that I've talked to, that they feel that it is such a specialty, the loan officer and also the buyer side, that it wouldn't really be something that a person could do both, is kind of their thinking. So when you take it to the next level, their thought is that it's really not going to impact that much on the mortgage lender side. More so, it's going to be the impact on the real estate agent side. That could be the case, but I certainly don't think that's the case. And I'm interested in your thoughts on, it does seem that the real estate agents I've noticed on the buyer side certainly are talking a lot about all the great services they do, but ultimately it's fundamentally about negotiating the transaction. And Do you see maybe parties like attorneys stepping into this? I could see where you can now have a national legal firm that's saying I can do it for $500 or something like that. Or does it lead itself to, well, maybe the real estate transaction can at some point become like an eBay transaction where it's just an auction and people line up to what they're buying. What are your thoughts on these changes and whether they make any sense?
I think there will be different models tried,
Hmm.
certainly on simpler transactions as well as the more complicated transactions at
Sure.
either extreme. We may see very different models. But in
Hmm.
the mass market, I still see uh, the need for a lot of expertise in each one of these transactions. So while you may have all that expertise under one umbrella in one shop. So
Hmm.
a mortgage business and some of the legal work done and some of the financing done may all be under one roof with different experts, but you have one access point to all of those experts in a seamless fashion, like I mentioned in the auto industry, but also increasingly for commercial properties, you deal with one firm. I deal with one firm, and they have a lawyer in-house who works for
Hmm.
the firm. They have a who drafts up the contracts. You have financing experts in the firm, and you have experts who know whatever commercial property you may be looking at, whether it's a rental, whether it's
Sure.
multifamily homes or
Hmm.
hotels and motels or whatever it may be, and they know office space, strip shopping centers, whatever you may be looking at, and they know that particular market and they know everything about it. So we're dealing with a lot of complexity. But again, on the mass market size, in a standard home, which is a
Hmm.
tract home, it's very, very different because then you could even say, like in the auto business, your buying cost is so much per month. And then
Hmm.
fine print says based on your FICO score and your credit history, it
Hmm.
can vary.
Sure.
So you get
So
attracted based on maybe less so on the home price itself, but what your monthly payment is going to be, which is what matters to
most
most
people.
people, because
Hmm.
the actual price of the home only matters when you sell, because that's when you realize a gain or not.
So do you see, in other words, a more urgency that lenders will be acquiring real estate companies or vice versa, real estate companies might be purchasing in a better method and more activity on the lender side? I mean, certainly real estate companies have tried to do the mortgage side and not that great, but do you see maybe this will move the mortgage industry to actually acquire a real estate agency?
I see that coming down the road. I see initially maybe their relationships, partnerships. So you may have uh, the mortgage company employees or representatives sitting in a real estate agency office
Hmm.
and or a virtual office because these days you don't really need a
Sure.
physical
Hmm.
office, and they may be part of the same conversation and they may be monitoring that transaction that is in the works, and if the as part of the initial agreement with the realtor may include a broader agreement for the financing so they can even qualify the borrower so that real estate agent can present the borrower with both alternatives faster than their competitors can, and that's where they have the advantage and say, "Hey,
Hmm.
you already have. I can, at the time, tell you now that this house will, based on your particular profile, credit profile, cost you so much. Financing cost will be so much per month if you take fixed rate, if you take variable, different options." Uh, the reason I don't think you will have one person be able to do all that is it's
Hmm.
difficult enough, as you know, in the mortgage
Sure.
industry with so many products. And at Greenpoint, we were the masters of multiple products,
Sure.
and we found that the customers we dealt with specialized, even our salespeople who
Hmm.
knew the product specialized only a handful of products, and that's all you need, by the way, in terms of
Sure.
variations.
No, that's exactly right. Well, it does lead to this issue that when you look at the real estate industry, is that the entry position was always on the buyer side, and then they become, in other words, they come in at that level, and then they move to the next, where would be a listing agent. And really, it was kind of their version of a rookie program. But if that grouping, the buyer's agent, seems to be segmented out, then it does lend itself is that maybe that model has to change because you're not going to have the buying agent necessarily coming in, as you said, and then of course grooming them to be the listing agent, which is really the power position. It's not as likely to happen. What are your thoughts on that? Because really the mortgage industry has set itself up similar to the real estate agent world. And so we start out possibly as a loan officer assistant. We kind of move ourselves up, but it doesn't seem as if that model is going to be obviously viable after this gets going in July.
As I kind of just touched on,
Hmm.
there's broader technology changes coming that would have
Sure.
changed all that regardless of whether this happened or not. And that's
Mm.
artificial intelligence. In every
Sure.
industry, the entry-level jobs are going to be the ones potentially most impacted because the paperwork and legwork in terms of what the uh, buyer's agent assistants did in terms of
Hmm.
finding the homes, in terms of doing all the research is now going to be all automated and technology driven. So maybe the person who comes into these firms is more a techie type person who knows these things inside out. And you can also imagine whether the interface between the agents and the buyers is in person or or
Hmm.
by other means, and you only see the agent when you actually go to see the home, or you may not even see the agent there because there may be people who specialize in just showing the homes who work for all agents. Their whole job is to show a home on a particular day, and
Sure.
and the agent just refers you and gets a time slot, and that way the agent becomes a lot more efficient. So I'm just dreaming
Mhm.
here, but I'm just talking about I'm speculating on the fact that there's all these different models that
Right.
not only enrich the experience and make it more meaningful for
Hmm.
a uh, home buyer, but also make the process of delivering and
Hmm.
closing on a home, the entire process of finding a home, uh, getting the
Hmm.
real estate transaction done, get the financing transaction done, all the closing transaction related things done in a much more efficient and faster fashion
Hmm.
for the borrower. Take, for example, years ago, and I want to bring up something that is so different. I was at Bank of America, and uh, Bank of America was the old Bank of America in
Hmm.
San Francisco. It was a latecomer in the ATM business, and I was in the cashiers division, which is the financial division, and we were evaluating a proposal to invest in ATMs, and it was very hard to figure out how many people would use it and whether they would use it at all. And some people argued, why would somebody use a machine? And today you see people lining up for ATMs, and that's allowed now for fewer branches and smaller branches and more ATMs. And then you see ATMs shared among different lenders as well as specific ATMs networks. So those multiple ways in which things can go are amazing. So you may find specialized
Hmm.
platforms that only present multiple homes that the realtor may refer you to, where you, on a 3-day basis, may be able to go inside the home, and the realtor, through the AI means, will select the homes that
Hmm.
appeal to you. And that's totally different business of somebody who actually goes in and takes those 3D videos, and you have
Hmm.
the experience of actually going in and you pick 3 homes and you're sure to select one of them rather than having to go. I know years ago when I bought a home, we had to see 20, 30 different homes
I know.
physically, and it was exhausting for us as was the realtor.
So you raise a great question, and that's why I love talking with you because really what I hear you saying is that, and I agree with you, and that the artificial intelligence is probably going to be more significant of an impact than actually this component of what we're perceiving the settlement being really all about. Because technically, the settlement's only for real estate agencies that are below 2 billion in assets, and so the artificial intelligence will actually, in other words, that's the more significant issue. Is that correct?
Uh, I think you have to overlay that,
Yes.
and
Mm-hmm.
I think it is the most significant issue in the sense that
Mm-hmm.
it is going to transform everything we do.
Right.
And this is the change that we're talking about in terms of commissions is one aspect of that. But uh, years ago, and this is somebody I got to know because he did some work for me at Radian, but later on, after I retired, he started his own AI company that does a lot of work in the mortgage industry, and he was one of the pioneers. But he had cut his teeth in one of the online women's apparel sellers, and
Mm-hmm.
he had created models where, as women browse through the uh, online catalogs,
Mm-hmm.
uh, often as the consumer, you don't know your preferences yourself. So they
Right.
picked up on all these cues and they got smarter in presenting the things that were most likely to be the ones that they bought. And then
Mm-hmm.
they got better and better at it. And, uh, that's what's going to happen in the housing side. You're going to, show the buyer a bunch of different homes and ask them to rank them. And how did you like the kitchen and how did the living room? And
Right.
sometimes people say I don't like the kitchen, and what they mean is there's not enough light in the kitchen as opposed
Sure,
to
sure,
fun.
sure,
So, but
sure.
they don't know how to articulate that. But the AI, if it's smart enough, will pick all those things up. Later on this morning, by the way, a completely different topic. After we finish this call, I'm going to get on my Carol bike, and Carol bike is an AI-driven bike which tailors. It was created by an cardiologist in the
Uh-huh.
UK, but it tailors its sequences to me. It can handle six different people with unique, uh, histories, and it will give me a workout, which is a 10.5 minute workout with two intensive 20-second bursts that's equivalent to a 45-minute run. Just hack.
Right.
It's called the hacking. So it's going to hack the whole exercise routine to give me the maximum kind of benefit in the shortest time in the most efficient manner. And the only reason I bring it up is hacking is another word you could add to the whole process on top of AI. So you're going to see very, very smart things creep into in this transaction, which hack the whole process that the consumer, the realtor, the mortgage lender, everybody goes through and make it more efficient for everybody. And potentially, for the ones who master it, there's an
Mm-hmm.
opportunity to gain more market share and make more money. For the ones who can't, uh, with
Mm-hmm.
any massive change, they're winners and losers. At Radian, when we went through massive industry, there were three historically well-known players in the industry, major players that everybody's name. I was one of them at Radian, and by the time I retired, all three of them were hovered between $2 at share price at one time and maybe $4. So by the time I retired from Radian, my share price was 19. The next player was around 11, I think, and the third player had gone to zero.
That's the
So
winner and loser strategy for sure.
yes,
So
and
as
before that, all three were offering the same. So
yeah, yeah. Yeah, I agree with that. But and I want to ask this question before we kind of have some takeaways for our listeners, because you're really raising, and that's why I'm so glad that I reached out to talk to you about if you had to sit back and put a crystal ball to the time of the dramatic change and disruption of what you're talking about due to AI. Um, do you think this framework is less than 3 years, less than 5 years, or is it 10 years out? Because I agree with you. You are raising really important questions, and I do think that we don't even understand that this is the driver that's going to really change everything.
I think in 3 years, we're going to see a lot more
Hmm.
on 5 years and a lot more in 10 years. This is going to be continuous. You're going
Yes.
to, the
Hmm.
people to succeed are not just going to have to succeed tomorrow, but they're going to have to keep running fast so that nobody catches up with them. You can't become a Yahoo and have Google take over from you
Right.
while you were a pioneer from yesterday. So people are going to have to keep running and keep dealing with these changes that are rapidly coming. And the reason I say within 3 years is it's been like 7 years since I retired from Radian, quite a long time. So I don't even know what's going on inside the company, and good thing I don't, and I don't need to. So I have, I just read a little bit of things, but when I was there, we had acquired a real estate platform which also had an MLS, which was
Hmm.
one of the unique platforms that had MLS data. And my vision always was then, and I don't know if Radian is going to do it, or has done it already, or will do it, or somebody else will do it, and I bet there'll be many people do it, was, you just sit down and do a comprehensive questionnaire with the borrower and or with a and say, what are you looking for? Distance from work, distance from
Hmm.
children's schools, and all of those factors. And with that, you go through the entire MLS listing and pick out the homes that suit them more. Now, the
Sure.
things we didn't have is that access to combining the condition of the home, combining the financing costs and the video of the home so they could go in and poke around and check things out. But all those capabilities exist today. They just need to be married, and the creative companies will work with each other and
Sure.
create that and bring that experience. And I'm calling experience because experience is going to be what it's about in the future, as opposed to relationship.
Right.
So we'll
Right.
migrate from relationships to borrower consumer. I'll say consumer because it's a consumer that's looking for a complete solution, to a consumer experience. And those who present the best experience that delivers the highest satisfaction, fastest, in the cheapest manner will win. And the ones who deliver it now better not sit on their backsides, because somebody else will be improving that experience.
Hmm.
If they don't disrupt themselves, somebody else will.
Well, that raises the last question. That's the hard question. And both you and I have been in this the financial services for a long time. Do you think that's realistically going to happen within the industry, or is it going to be outside factors that really drive this industry to make these changes?
So far, if you look at the changes in
Hmm.
even before I retired from Radiant, there were a lot of, particularly in San Francisco, and I can see San Francisco from where I'm sitting. I happen
Hmm.
to be in the Bay Area, at least for a few more days before I start traveling again. Uh, you know, in expensive locations, there were all these startup
Sure.
fintech companies that were aimed at that were going to revolutionize the mortgage industry, and for the most part the VC guys said, oh, nobody from the industry will be able to disrupt. It's going to take people from the outside. And
Hmm.
my prior number two guy from uh, Greenpoint started a company, and he deliberately headquartered his company in Emeryville and did it the old-fashioned way, but he was very innovative. So today he stands successful, whereas most of those companies that offered nitrogen coffee and had lots of analysts in very expensive space and financed by VC companies have, for the most part, all disappeared. So I
Right.
think in this industry, and then you see players like Rocket Mortgage and others
Hmm.
from within the industry who emerged as very, very successful using a lot of technology. My friend Stan at Freedom Mortgage. I mean, I'm just naming one or two, and there's many. So I think the change, this is such a complicated business that the change has to happen within the industry, but by importing people and thought leaders from outside, and tomorrow's leaders running the businesses that you and I were involved in will be
Hmm.
very, very different kind of people. They'll be people who know technology inside out,
Hmm.
not in an IT sense of programming it, but it's in a sense of how technology can change things and how it works when
Right.
you connect all the parts from a rocket. So if you go to Google and so on, there are few people who do the coding. There's a lot of people who do what I call the Imagineering.
Hmm.
They imagine what tomorrow can be like, and they make it happen in terms of the experience of the. And they're not per se narrow engineers or so on. They're people who
Right.
have a capability of marrying, who know enough to marry all of that together.
Well, wow, I love all that you're saying because I don't think we have enough conversations about that. But is there any takeaways today that you want to leave our listeners?
Yes, and that is, if you're within the industry, don't be scared of change. Not only embrace change, but that is almost passive, embracing change that somebody else, but create change and be on the leading edge. And don't be scared to be there. And don't be scared of small failures because success is built on small failures. That's the only thing, Pat, that bothers me about our model. So when you are running a large company, we are in such a we have such a disincentive when you're running a large company to invest in expensive change because our whole mindset is quarter
Yeah.
over quarter over quarter performance, and that drives and quarterly board meetings. And so you spend so much time. That's why the privately held companies and the private equity companies, led companies are the ones that are pioneering the change. So it could happen within the industry, but only in some cases in publicly held large companies because they are,
Hmm.
like it or not, enslaved to this quarter by quarter performance, but the investors don't think longer term. You miss one quarter. And of course, if you invest creating new things, you will miss a quarter or so. In fact, to me, that's healthy because you're trying new things and R&D is a big driver. But that's why more and more of our businesses, in fact, Jamie Dimon was talking about how fewer companies are now publicly owned and private equity has become a big player because private equity has longer term vision. So
Sure.
this change could happen in private equity owned companies and private equity may be the leader in combining all these entities and bringing them together. So that company I talked about, which was created by number two guy at, from Greenpoint, that actually was one of the, not only the survivors, but the successful players that emerged at a time when a lot of fintech, VC finance fintech failed, uh, is now owned by a leading private equity firm. And there's a beautiful marriage because he creates mortgage products, and that private company has many insurance businesses that have an investment portfolio that can invest in some of those products that are less liquid at this point so they can pioneer and test new products, but also in parts of the products in creative slicing and dicing that goes on in the mortgage industry as you deal with investors. So
Hmm.
there could be emergence of products under that umbrella that shared equity products for people who can't afford a home, or
Hmm.
all kinds of things we talked about in the past that were hard to happen in the silos
Sure.
that could happen in this world, which is coming together not only through regulatory changes, but also going to happen in a bigger way through AI and technology.
Right. No, hey, that's fabulous. And I really appreciate you taking time this morning, sharing all your great thoughts. Have you come back and talk about artificial intelligence more? Because I don't think that's a topic that the financial service industry talks a lot about either. And I want to thank our listeners today. And certainly, if you would like to subscribe or receive notifications on our latest podcast, go to patsherlock.com. Thanks again so much, SA.
Thank you, Pat. And anybody who's interested, it's a dated book now. About 5 years ago, I wrote an intro to a book on artificial intelligence in the mortgage industry, written by this friend of mine I was talking about, Amit Nagel.
No, I'm going to get it myself. Thanks for listening to Mortgage Manager Playbook. You can catch up on all our episodes by subscribing to receive each week a new show. Don't forget to share this podcast with your friends and team members. If you're looking to increase production, call me to discuss my prospecting sales training program, Ramping Up Realtor Referral Sources. Check out my website, www.patsherlock.com.